Welcome to Unfiltered Finance. I'm your host, Emily Turner, and joining us today is Chris Pulver. And we're breaking down further the PDT rule changes that have happened. And Chris, on first glance, this is great news for smaller accounts, for folks who want to day trade, but there's some things that are hidden in the fine print. What is that?
Unfortunately, yes. So what we're discovering right now, I mean, we did a big session on this just a week or two ago. Look, it's exciting news for the retail trader. It should be a big win for the retail community. But now what essentially is happening is you're taking the regulatory decisions from the SEC and FINRA, and you're taking that and putting that responsibility and freedom and control to the broker. And so now the game is my broker going to remove, all pattern day trading restrictions, and what does it look like from this broker or this broker or this broker, because they're not the same. And so I think that's the only thing I want to caution traders on right now is, yes, this is exciting. This is a big win for the retail crowd, but it is very important. If you take one thing away from this entire session today, it is know your broker and know the buying power requirements when it comes to executing trades and actually trading on margin, because all of that is going to be based on broker to broker internal rules now.
When the announcement first came out, everyone was excited. It's like, oh, the rules are gone, the seatbelts are off, like, let's go.
Right.
But the regulation, not regulation, or like, let's just call it air quote regulation, falls to the brokers. Practically speaking, how does that work? What does that relationship look like?
So when the big announcement was I mean, this all came back from we had a government shutdown last fall, and so this was when it was all kind of in the works, and we expected it to be kind of done and wrapped up with the rubber stamp at the SEC, and everything's lifted by like Q1 of 2026. April 14th was that big like lift, and now you essentially have the rollout phase or the rollout window, and it does vary from broker to broker. Some brokers have been talking about this for months and months and months, and they're ready to roll the stuff out as soon as possible. It could be as little as maybe 30 to 45 days. Great. Other brokers, and I'm not naming names here, but other brokers, this might take as long as 12 to 18 months to roll the stuff out. So again, I go back to what I said earlier, knowing your broker when this all goes official to you as a, possibly retail trader that has, the 25K margin requirements are no longer a thing. But as far as, how much you could trade, are there any type of like throttle mechanisms, or are you going to be restricted on anything from intraday trading? That's stuff you all need to be asking your brokers right now and get a very clear answer, because anything that's vague and uncertain is just like maybe a bit of a red flag moving forward. But again, I don't want to downplay like this is a big deal. I think there's going to be some benefits that come out of it. They should be, because pattern day trading was a very harmful rule for most traders. When if you're a warning is one thing, but when you're penalized and you're basically frozen out of your account for 7 days or 30 days or up to 90 days sometimes. I mean, what do? You're leaving traders to do something that you can trade in the markets on and really like use probabilities and have good trade setups and good mechanics, and you're going to let them just go off and trade prediction markets or trade on betting apps. It's like if there's no restrictions there, that's why I'm like this needs to happen with how evolved things have become as far as how people are trading in. I'm not going to say gambling, but how people are like putting their money to work. Don't restrict traders. It's like people will trade and they'll figure it out and they want to execute. And brokers should love the fact that more traders, more trading, better commissions, more frequency. Like I think this is a win-win that keeps the traders in business, and it's a good business model in my opinion. I just don't want to see it turn to like it's really a power game now that the brokers have, and they will determine when and if we can trade and how we do it, and especially if there's intraday mechanics that change, that's going to be really difficult to like track. So anyway, I don't want to sound long-winded here, but just the know your broker stuff is going to be really important.
How
And I'm
well,
hoping at the end of the day,
let
it's
me
good
stop
for.
you there because you
Yeah,
made an
sure.
interesting point. So, how does this change the role of the broker? Does it give them more power, and if so, in what regard?
I think it absolutely gives the broker a lot more power, because what they can do is they can have this dynamic risk management model that determines, if, and I think what's going to happen is ultimately they're going to be like bucketing their traders into certain areas, which is, okay, this account size, how much leverage that they have, are they trading on margin? And that's going to be like a certain risk profile. And I feel like that may be the bucket that's going to be under the most scrutiny, because that's the highest risk trade. If you have somebody that has a smaller account, they're trading on margin. Granted, it's not a big dollar amount, but that's always risk that the broker has to kind of cover and float if something goes wrong. And so if they change buying power requirements. Case in point, this year, I mean, we've seen some wild moves in individual stocks, and we had a little drawdown this year in the S&P and the Nasdaq. But oil prices and oil derivatives and options and all the buying power requirements changed. Where just trading like a single leverage versus a double leverage versus a triple leverage. I noticed for me in my portfolio management, I noticed that when I cleared up some of my energy positions this year, my XLE, my XOM, my CVX, I'm trying to think XOP, like some of these like energy related plays that were doing very, very well. I had tons of buying power come back to me for positions that were really never in trouble. It's just they tied up more capital, and I feel like these assets we're trading, if something is heavy in the news and heavy headlines, and people are going to have the stones to trade it, I feel like brokers would be like, yep, that's going to be double margin now. And if you don't know that, you could place a trade thinking it's defined risk, and it's like, well, that trade usually with this spread should maybe only cost me a few $100s. Now it's a few $1,000s. That's a big difference as far as putting your money to work. So there's the art of war, right? Where it's like, your enemy before you ever take the first swing or whatever it is. I'm paraphrasing terribly, but same thing in trading. You do know your reward and risk before you ever place a trade for a defined risk option trader. So that's my wheelhouse. That's pretty much what I'm doing. 95% of the time is defined risk option trading. And so when it shows, this is what I can make, this is what I risk. If price is infinitely higher or infinitely to zero, I know that that's my risk and reward on the trade. Anything undefined risk, you just have to know what you're dealing with and manage your premiums and manage your stop losses and things like that. So to your question, the brokers have a ton of control right now. I think that's what this ultimately is giving the brokers a lot of control. I think it's better than nothing. I'll say that as like this small little win for retail traders. It's better than nothing. It's still going to take a lot of, a little bit of digging, a little bit of due diligence on the trader's part to make sure that you are working with a broker that takes care of what you need as far as permissions and the way that you like to trade and the strategies that you run. Because I think you find yourself in a very handcuffed position if the way that you are trading now is somehow going to get worse. And I hope that's not the case when they no longer have like that fourth trade as the flag and you're restricted and you're locked out of your account. If that goes away, that's a big win. But the buying power stuff and the margin changes, this goes dynamic. This could be real time and intraday. Those nuances could be really, really penalizing for somebody that doesn't have any idea what they're doing with their risk modeling.
Well, then, so what are the questions someone should ask their broker to make sure that they're not going to get locked out in, some other kind of way?
Yeah, for sure. Okay, so I've got some key questions. I would say this is what I'd ask, my broker. When will your platform fully transition away from pattern day trade restrictions? Like we said, April 14th was the big rollout. It's officially gone. But now there's that like 30, 45 to 18-month window of like, when does my particular broker are they fully lifting the pattern day trading restrictions? So that's a good question. Is it already live in my account? Most likely no, but in the next maybe 3 to 6 months, it's probably live. I hope nobody has to ask for it, right? I hope it just pops up and it's like you can take your fourth and fifth trade in a week and close out trades and you're like, I used to get locked out when I did this. And maybe that's a nice little victory to have. But just knowing like, is there actually a timeline that these brokers have right now? Or is it like, well, we're still working on it. We've got to run it through compliance and blah, blah, blah. And maybe it's, 30, 60, 90 days from now. Does this type of update, does it apply equally to margin and cash accounts? Is there a difference? If people are managing IRA accounts or people are managing just margin accounts, how are they treated the same or differently? Here's a big one here when it comes to like intraday stuff. Are there going to be any mid-session or intraday restrictions? So example that I use is usually once a month in those big FOMC months where we have the Federal Open Market Committee. Jerome Powell is going to step down in May. Kevin Warsh is stepping in as new Fed chair. FOMC days are notoriously sticky volatility days. And I hope I never see this. But if for some reason we see that there's higher margin requirements or higher buying power requirements just because there's a big news event, that's the broker's way of basically, de-risking in the day, but putting the risk on the trader for like, well, you didn't know that we increased margin. That's something that's a wait and see for me, but that's another question I would be asking. Like, if we have major events like a non-farm payroll or we have FOMC or Trump is on the calendar to speak, does that change your risk modeling in any way, shape, or form? And if that's a yes, again, it's a good question that you'd ask that. Other things, let's see here. Do you have any, can I have a list? Do you have on their websites, do brokers have anything that show, the buying power changes or what's the leverage and margin on some of these certain tickers that we trade? Just to know, like, if you're dabbling in the space of single, double, triple leveraged ETFs, what does that look like from a buying power perspective? Um, Another one as far as liquidations go, and I've said this because this happened in my career, during currency trading. Will I ever be forced to liquidate under the new system? A lot of times right now we get like a reg T or maintenance call. If you're ever going to be forced to liquidate, or the broker should at least give you a warning or heads up. And I would ask again, how much warning do I have before I'm forced to close positions? Because a lot of times we're given the day to close positions versus just automatic liquidation if I'm over leveraged or over margining. This case in point, if anybody's ever experienced this, if you trade an option like a naked put, just very very basic stuff, but I'm willing to own a stock and I get assigned. Well, if I don't have the capital to own 100 shares of the SPY at $700, if I don't have $70,000 in my IRA to own that, the broker will give you that day to like clear that position, especially if you did a initial spread or something like that, or if it was a naked put, you just close out. But point is, I hope that we have the freedom to say we get a day, we get like the day or the day to manage it, the day to close it out versus just an automatic liquidation. And then also beyond the SEC and the FINRA rules, are any brokers, this is something you can ask your broker specifically, what internal rules have you added? Are you keeping any type of pattern day trading restrictions internally that you're just not telling us? And so, put the broker, put the spotlight on the broker and ask them these questions because you want straight answers. If their answers are like, well, it depends, we're still evaluating, it's still going to be 30, 60, 90 days, blah, blah, blah. We don't really have a timeline yet. We'll let you know. I mean, that doesn't make anybody feel good. It's like this has been touted as this big win for retail. And yet here we are like now asking all these questions with these brokers to know, like, am I going to see like trading and permissions improve? Am I going to see, better the ability for me to trade as I want to trade instead of these restrictions? So again, I guess I'm painting like a pretty cautious picture here, just because I don't want to see anybody, make a mistake that could be preventable or avoidable by just asking some of these questions. And just know that if you don't know your broker very well and you don't know the risk models that they're using, you could be caught on the wrong side of a trade that you could end up taking a pretty big loss. And so I don't want to see that happen to anybody, because just a little bit of homework, a little bit of due diligence, and a little bit of asking these questions could go a long ways when it comes to like, okay, this broker fits my style. I have these permissions. They have reassured me with these things. And again, you still have to trade to manage risk, but you feel a lot better when the broker can give you straight answers. And so if they actually have like, yes, exactly on our website, here's our margin formulas for everything you do, here's our risk thresholds, and these are things you might want to look out for. It's like if they have resources for us to follow, then we can put two and two together and actually know what we're getting into. I'm just trying to show this to have no surprises.
To assume, like what I hear you saying is, it's not fair for people to assume that just because the rules change federally, that's how it's going to be at everybody's individual account, and that brokerages or brokers are able to set their own rules within that.
That is exactly right. And that's what is a little scary about this, because it now makes it where each broker could act very differently with their own set of rules that you as the trader are going to have to abide by. And again, having been in this space where I have been, I've gone from broker to broker, and I've seen detrimental things happen to trading accounts, with my own accounts included, but also just a lot of people that I've taught over the years. It's never fun to feel like the broker is assuming control and basically limiting what we can and can't do. And I've always said, like, I never want to work with a broker that restricts what I want to do trading wise. And so, I feel like I'm in a good place right now. I've been consistent with a broker for almost a decade, and they don't bother me. I know what I'm trading, and like I said, my style is mostly define risk stuff, so I really shouldn't get myself in much trouble. But it never hurts to ask those questions. It never hurts to know exactly what you have as far as fees, commissions, trading permissions, and just continue to trade. I mean, you want to stick to the process. You want to focus on trading and not be bothered by this. But at least right now, since the window is unclear, this isn't just we lifted the restrictions, everybody's happy, big win for the whole world. It's not that. Right now it is every broker is different. And I don't like that. This initial rollout seems a little messy right now. And I actually had traders, like after we did that session, Emily, a lot of traders reached out to me and said, hey, so one side you're saying this is a big win for retail traders, but it depends on the broker. And I'm like, yes, that's exactly right. So ask your brokers these questions and know, what you're getting into, because, maybe the best thing, and this is difficult to do, but the best thing might be to transfer to another broker, to go somewhere else.
Say I have, let's just say I have a $10,000 account with one broker and a $10,000 account with another broker, but the rules could be completely different. and the margins could be completely different.
They could be, and again, it's a great experiment to know and have, because if you have that like 10,000, and those trades you could execute are treated very differently, obviously you'd want to be going towards a broker that's going to treat those trades the best and treat that capital the best, lets you work and leverage that capital to the best of your ability. I mean, here's an example. I take some pretty straightforward trades in my services, and I know when I take a trade, I'm like, look, if this is just a one contract trade, like very basic stuff, the maximum risk is $50. The stock can go to infinity. It can go to zero. My max risk is $50, period. And somebody will email me and say, well, my broker says it's going to cost me $10,000. I'm like, I don't know how. I don't know how internally they're tying you up for $10,000 to take that little trade that should be no more than $50 risk. And so it's that type of stuff where that's a red flag for me. You've got to ask those questions, and it's uncomfortable and it's inconvenient, but you're a trader. You're signing a lot of risk away when you sign those dotted lines to open these accounts up. And so I just think you have to take the extra step and make sure, like, you have to protect your capital, protect your permissions, and know who you're doing business with as far as the brokers go. And again, I haven't listed a single broker this entire session, and that's for good reason, because every broker is good in their own ways. But every broker, I would say that not all brokers are created equally, and not all brokers are going to treat you, the trader, equally. So it is going to take a little bit of this window to figure out, like, where do I want to go for me to trade the way that I want to trade.
What is a worst case scenario situation?
Worst case scenario, in my opinion, would be you think you can trade as much as you want, and all of a sudden you find yourself being throttled back where the buying power changes intraday, or there, like I said, with FOMC as a news day, the market all of a sudden it's 2 to 3 times buying power for one trade that would be a defined risk trade, and all of a sudden it's 3, 4, 5 times the buying power. And if the broker automatically liquidates positions, that's where I would have a huge hurdle in my my personal trading. I'd be so bothered and annoyed by, I cannot believe that they're limiting me like this.
So
That's kind of worst case.
These are really important questions to ask.
For sure. Look, it's your money. It's your money. It's your trading capital. It is finite, right? If a liquidation happens, that's something that you could typically control, and all of a sudden it's automatically liquidated, that money is gone. And that's never a fun feeling. And I've had it happen, and that was less than 20 years ago on margin. But I did it, and I didn't realize that I was over leveraging at the time, but I did, and I stepped on it. And this was a currency broker that did liquidate positions automatically. Well, at least in trading stocks or indexes or options, if I'm assigned on something, I typically have a day to resolve it. And I can call my trade desk directly and get it resolved, and they can see that everything's going to be fine. We'll settle it here, and this is your defined risk you put on initially. So it's nice to have that kind of backup plan. But like you said, the question was, worst case scenario would be if you're ever automatically liquidated and that money is gone and you didn't know how or why, you're not going to get the money back. Like, the broker's not going to make this mistake and say, like, oh, we're sorry, Emily, we just did that on accident. It's like, no, that money's gone, and they're going to tell you why, and then you're going to be stuck deciding, well, I guess I won't do that again, and that's a very expensive mistake to make. So what we're trying to go through here are some of these questions you can ask to get a better picture of how to prevent the unknowns moving forward. Because what this should equal for everybody is, if you do a little homework, ask these questions, when this goes into effect, what it looks like from your broker perspective, and now you can trade with knowledge and understanding moving forward. So I'm trying to do all this because I don't want anybody to have these crazy surprises when it could be something that's avoidable and preventable.
No, and I could see that happening in the beginning as everybody's really excited. Last question for you. If I'm a broker and I'm a bad actor, is there an opportunity for me to take this rule change and benefit from it financially?
Yes, but I think ultimately, if you're going to be a bad actor, and you're going to, really, if you're going to fleece the retail community, ultimately you're going to give up a lot of retail trading clients, because they will go to where their money's treated best. Fool me once, fool me twice type thing. So I see it's borrowed time if you're going to be a bad actor thinking this is an opportunity to, fleece retail communities. But I think ultimately, it's going to make brokers a little bit more accountable on how they manage risk. And the brokers that do it best and transparently will probably be the ones that are, here for the next 5-10 years doing better, having hopefully better permissions, more traders. right now it's like we're already starting to see the excitement. Like Robinhood has been this, gamified trading app for a long time. I personally got out of everything Robinhood once the GameStop debacle happened because I couldn't believe you got frozen out of your account for days and you could only be a seller of your positions. You couldn't buy more GameStop. And I just thought, this is a broker that is intentionally limiting what you can do. And I lost a lot of respect for that process. All of a sudden you discover that they're pay for order flow type stuff with Citadel, and this is a Melvin Capital thing, and it's like it was a weird kind of Wall Street conspiracy at the time. So I got out of Robinhood. Now I still respect them as a broker. Their stock is doing very well. They have a ton of users, and if Robinhood does it right and they want to be like cutting edge with this win for pattern day trading, they will probably win back a lot of those traders that were lost like I was. Or they just make it where it's like, look, you can have a small account, you can still grow and leverage, and this is not, we're not trying to restrict you. We're not trying to, take your money and liquidate, but it's like, there are still ways that if you don't know what a position looks like, you don't want like buying power and margin looks like, it's just a slippery slope, because one trade in excessive margin that can be liquidated is never a position that you want to put yourself in as a trader. So I'd just say, if anything, this all comes back to one of the simplest rules in trading, which is manage risk, and that's like rule number one, is managing risk. And this is a very long-winded way to say all of this, but that's ultimately it comes back to is know your broker, know your risk. And I think that trading defined risk is probably the smartest thing, because you shouldn't really have any crazy surprises. But when the brokers have this much control now moving forward, and I also think that what I don't want to see brokers do is slow play this. This is a big deal for the retail community. Don't take 12 months to roll this out. That would be very frustrating for somebody to stick with this, and they've been penalized maybe once or twice, and it's like 12 months from now. So, they might start looking for other brokers. So the faster this gets rolled out, the better for brokers. People just continue to trade. People want to trade. It's a game. People want to play the game. People like it. And, it's not easy. It's challenging, but I've never seen something like the financial markets that gives us an edge in the near term or big picture, that we just have to participate. If we can survive and participate, there are lots and lots of opportunities to take advantage of. There's lots of money to be made, and the market doesn't care. At the end of the day, the market doesn't care whether you make a bunch of money or lose a bunch of money, but you certainly do. So don't let a broker, liquidate your positions and take money if they're doing stuff, internally. But like I said, just go ask the questions. It's inconvenient right now to know, oh my gosh, I thought this is all rolled out right now. It's not. It's going to be a window that you need to find out, is this in the next 30 days for my broker? Is this 12 months from now with my broker? And maybe start shopping around. It's not a bad time to like start looking elsewhere to see what broker could treat me best and hopefully get some straight answers.
Yeah. Well, Chris, thank you so much for your time. And I would love to hear from anybody who's watching this video how they feel about their broker, if their broker has rolled it out, if they're looking for a new one, and who it is, because that'll be super helpful for everybody who is listening to this interview. And as always, click like and subscribe. Thanks so much.